Traders and investors, good morning and happy Friday. Welcome to Pre-Market Prep, the last episode for this week. We got a decent show planned for you. Dennis and I are going to make the case on why it seems like buyers are getting pretty darn exhausted out there. Rallies are being sold, but one name we're going to talk about being extremely resilient here in this marketplace. I'll give you a hint. They are in the chip space, and it's not Intel. Intel with a miss and okay guidance, but not a great reaction. Deckers, some profit taking on a good report and so-so guidance. We're going to get into the healthcare space with earnings out of CNC and continued reaction lower in names like Molina, United Health, and Oscar. Schwab with a $20 billion buyback, a couple offerings that we're going to talk about, and ratings a little bit later. Guest today, the Warlock, Kenny Glick at 8:35 a.m. Folks, let's get it going here on this morning's Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Good morning, Triple D. What's going on?
What's up, Brentster? What's going on? It's just me and you solo today. Joel.
I like it.
Joel's going to be going for the Olympic championship here, Senior Olympics. He's trying to be the first 80-year-old to beat all of the other swimmers there. So he is training and going to be going. We'll keep you guys updated on Twitter if you're interested in that. But we also got to give a shout out to all our Hulkamaniacs out there. I absolutely loved Hulk Hogan, loved wrestling. This is like bringing me back to my youth. So rest in peace, Hulkster. We loved you. Hulkamaniacs were running wild back at WrestleMania 3 when in front of 93,000 fans at the Pontiac Silverdome when the Hulkster got up and he grabs Andre the Giant, he body slams him. It was just an awesome. That's the highlight for me.
What a moment.
I never watched wrestling like later on, like when you got that 18 world, WrestleMania 18, 19. But I loved the first ones. I loved all the old ones with Andre the Giant, the Hulk, and he was just awesome back in the day. I am a real American. It was awesome.
That was the golden
rest
age.
In peace. We lost a couple good ones, obviously, Ozzy earlier in the week. Love you, Hulk.
Chuck Mangione, also great musician. Maybe I'll listen to the song "Feels So Good" a little bit later today. Great song if you don't know that song. Dennis, do you want to do a quick little rundown of the markets, or you want to just jump into the news?
We could do a quick rundown, but really, you know me, I don't jump into the news. We'll just say S&P's basically flat. It's been a quiet overnight session. Yes, you're going to see my charts here today because Joel's away. Thanks to Trade Ideas for the charts. It is just quiet. I mean, you can really see. So when you're looking at these bars, you can really see the after hours action. Here it is, and pre-market is kind of hanging out. We're kind of just drifting a little bit, not really doing much here this morning. So it's a quiet morning here. Yes, we're up 70 cents on the SPY. So the buyers go on, but we titled the show Buyer Exhaustion, and people probably scratching their head. What are you talking about, Dennis? Like buyer exhaustion. I only see the stocks going up every day. SPY goes up every day. They don't look exhausted at all. Look at AMD. The stock makes new highs. Well, yeah, we'll move away from AMD for this conversation just for a minute here because AMD getting a lot of love. Still one of the biggest positions in my long-term portfolio, and I like that it's getting a lot of love. But just, looking at, reactions to earnings. And, Joel was on with Todd Gordon yesterday and was making good points that 80% of companies have beat earnings this season. But a lot of those beats, which we were highlighting, a la IBM, that they beat and beat, but the stock was down 9% yesterday. So the reaction to the earnings hasn't been really that great, considering how strong the markets are. We're at all-time highs. It's not like they're reporting and they're gapping and going. Sometimes they're reporting and they're gapping. For instance, Intel here, gapping up. The report was fine, and then the leak, and then the leak, and then the leak, and then the conference call, and then the sell-off. So we have seen, where some of these rallies are actually getting sold. So that's going to be the case. We'll dive into these in a little bit more detail in a second with the Intel report. I'm just building this case because I think a lot of people would argue with me that there is some initial signs of buyer exhaustion here. Jumping to the short squeeze trades. We had AEO yesterday, trading way up over $13 in the pre-market. And she leaks her back and gives her all back. A lot of the short squeeze trades, and maybe these ones we're going to give it back anyways, because these short squeeze trades, are not long for the tooth usually. Coal, same thing. We got to go to the daily to see it, but you can see the big pop. It ain't even a hold for the day and kind of starts to give it back here again. So I just feel like there is a little bit of buyer exhaustion. Does that mean you sell all your stocks and you move on? No, it just means this bull market's a long ways in the tooth here right now. And, maybe we're going to have a cooling period. That's kind of where I'm at. I think, there could be the case where we start looking at, reactions. Bank of America does the big buyback yesterday and, $20 billion buyback, or $40 billion, I think it was. And the stock, rallies a bit and then just reluctantly starts to give it back. So we're just starting to see a little bit of buyer exhaustion in this market.
Dennis, you're doing a good job controlling the charts. I want to give you that compliment. Thank you for doing that.
I'm not usually good at this. I don't multitask.
No, you're doing a good job.
I always love it with Joel, but we're trying here.
And
I don't have the fancy drawing tool either, so I have this little pointer, and we can go like that. That's about as good as I got for you.
And we got another good example here for you on this fade trade, but let's get started off, I think, with Intel, and then we'll pull in how AMD's resiliency is kind of working into the Intel report. Let's get to that report. Q2 adjusted earnings, a 10-cent loss. Analysts were actually expecting a 1-cent gain there. So when you are, expected to be reporting a gain and you report a loss, don't like that. Sales did beat. The guidance was not great. They are expecting Q3 loss 24 cents per share. Analysts had been around 18-cent per share loss. The sales guidance was fine. Q3 sales expected 12.6 to 13.6 billion. Analysts down around 12.6 billion. But we were kind of digging through this report as it was going. And Dennis, what was the comment that you kind of when we were looking at this report, you kind of threw your hands up at Intel and you were like, oh, don't buy crappy companies ahead of earnings?
Yeah, just my own commentary. So nothing coming from the company, but stocks that are in these eternal downtrends here. And I mean, if we go out for the longer time frame, Intel has been in a downtrend here for a while. Obviously, the stock has been the dog of the group. Think about, what they could have been with better management here. But stocks that, or just have a lot of downtrends have a lot of overhead supply. There's just a lot of people who are down in the stock. So when you get these initial pops, like, boom, yeah, this is the turnaround story. Turnaround stories are tough, man. Momentum trades, those are easier. Stocks making new all-time highs like AMD, they just want to go higher. Intel's like the reluctant, child there. It doesn't really, want to participate there. So when you get these pops, they're met with happy sellers, happy people who have lost a lot of money in Intel, saying, holy crap, I'm getting my money back here. I'm getting some of my money back. I'm going to take it and move on. So the pop did not hold long. It did get up to, I think, about 24, 32, somewhere in there. And then the next bar, we start to leak, tries to hold on a little bit here, and then tries to hold on, and then now. And then, it's Intel is Intel. So once a dog, it seems like always a dog. Momentum traders want nothing to do with it, and value traders are skeptical.
A little bit of that initial pop you maybe thought was related to the company announcing some headcount reduction. They're going to cut their workforce by 15% by the end of 2025. So yes, they are saving some expenses there, but we kind of were looking at the report right when it hit. You were like, oh, it's going higher because there's a little bit of finagling that management is doing here, and then that got sold almost right away.
I think so, Brent. And we do see this, that I always say you get like a 5 or a 10% reduction. It's like more efficiencies. But once you start going, how much was this one? How much was the reduction?
15%.
Getting a little bit high. It's not like Sarepta was 36, and that was like a reduction. That's why when it had that big pop, we were talking about it. Like, this is more out of necessity when you're cutting 36% of the workforce. So, I mean, algos out there, reprogram yourselves here. Talking to you, yes, AI algos. When you get a 5% reduction, they kind of like that. It's more efficient. When you get over 10, they start to get skeptical and saying, well, that's a lot of people. Is demand going down? Are you not needing these people? What's up? When you're up at 36%, it's almost out of necessity. So I don't like them when they're cutting workforce by 30%. I don't like them when they're cutting by 20%. I like when they're cutting by 5%. So anyway, initial pop, there's like, okay, yeah, we need to do some cost cutting here because the core business is just not going that well. Well, the core business is not going that well. So why am I paying 10, 12% more for it, from this earnings report when the stock popped 9% last night? So it gives her all back. It's just, you just got to go with best of breed. This is really what needs to happen. It's going to be your segue into AMD here as well, which is not best of breed, but it is right now. But, when you're always looking at these sectors, I always say 2's company, 3's a crowd. You definitely got NVIDIA, the leader of AI. We can go out to the dailies, and I'm obviously trying to move these around a little bit. Been just unbelievable moves. You go with AMD, been an unbelievable move. You go with Intel, and you're like, where's the move? 2's company, 3's a crowd. So for so long, we've always highlighted, sectors that have 3 major companies, and it seems like, we've always talked about Walmart. And again, this is a daily, so, but we won't know Walmart's done really well. Costco's done really well. And then you have Target, the Target is just slough for dead. So it's the one that's out. So again, 2's companies, 3's a crowd. Think of that when you're trading here. So I think AMD and NVIDIA are your clear leaders, obviously, here. And Intel just, could have been this, but the management was just too poor to find its way. So I have a little bit of Intel in my long-term portfolio. It's so small, I'm probably just going to dump it eventually because I don't know if this turnaround story is ever coming here. The company that I do want to keep buying more of on dips is AMD with Lisa Su. And I've made this argument for the past year and a half. And I was very early on this trade, Brent, it, because I made it my acronym for last year. And then I was so confident, I was like, I'm making it for it again this year too. So last year, my acronym was NASA, which was NVIDIA, AMD, SMCI, and then I put Amgen in there, which I should have put Broadcom, and it would have been awesome. But this year, my trading acronym was FADE. First one was the FADE trade because I anticipated a lot of chop. I actually said the S&Ps could end up in the same spot that they start the year, which we're not too far from that. And obviously, off the bat, the FADE trade was working really well. The A in my FADE was AMD for the second year in a row because I really believe that Lisa Su is eventually going to figure it out, and I think she's figuring it out now. The D was Dell, and the E was Etsy. Those are both doing well, too. So my FADE trade is doing very well this year, but AMD is doing the best. And every time this goes to dip, I try to add more of it to my long-term portfolio because the stock is rocking and rolling. We had JV in the STN room saying, man, we should just be long this every night because it seems like it opens up every day. And it does. And the rally is long in the tooth, folks. I mean, here we are. We're rallying again on AMD this morning. It's up another $2. So, it just continues to move on. But I think people are starting to realize that, hey, AMD doesn't have to take out NVIDIA and be the number one player in this industry. They just have to become the clear number 2. And if they do become the clear number 2, you start looking at market caps. NVIDIA over $4 trillion. AMD like $280 billion. It's a fraction. It's a small little pea compared to NVIDIA. Well, if they start grabbing a little bit of that pie, just a piece, imagine they got up to like a 10% market share. Then all of a sudden you're talking, like a stock that could double. If they got like a 15, 20% market share, the stock's like a 3-4 bagger. So I don't know if it's possible, but I know Lisa Su, when you're buying companies, you bet on management. You bet on the team that's there. And you think about where Lisa Su has taken AMD from the absolute gutter, where the big company was bankruptcy, 20 years ago, to where it is now, an AI powerhouse. But I think AMD still has more room to run. So I'm still a buyer of pullbacks on AMD.
And Dennis, we are kind of reviewing a lot of the sentiment that you shared on AMD yesterday, but this is great because you have so much conviction in this. You're like pounding the table on AMD right now, I think. And
for 2 years. Finally, I'm starting to be proven right here, but
especially this week. But I think one of my favorite things that you said about AMD yesterday was that dips on AMD are very muted right now. And I think it's a really good point.
Yeah, people are coming in and buying them. They're coming in because they believe in the story, and it's starting to grab in social media as well. And we know one thing about 2025. This market likes a sexy story. This market doesn't care about putting your CFA hat on and crunching out your numbers and figuring out your valuations. And, well, this company's trading 6 times earnings, and, Tesla's trading 150 times earnings, so we're going to short Tesla and buy GM. No, it doesn't care like that. It wants a sexy story. AMD story, pretty sexy right now.
Kind of getting sexy right now.
Yeah, that's it. And that's where we are. And that's what this market is. And I mean, if you look at the stocks that are getting hit here today, like think about the most unsexy story you can think about right now. It's right here. It's Centene. Very unsexy story here. The stock continues to go down. It seems like every single day They report earnings here, and I'll let you get those in the background here, Brentster. But
yep,
they report
earnings.
The bar was on the floor. They dug the bar into the ground, because the bar was so low. Here's a stock that's been cut in half ahead of its earnings report, a la Molina Healthcare, a la their own warning. So they've already said it's going to be bad. So you figure, okay, well, how bad can it be? How bad can it get? Well, give it to us, Brent.
So they reported an adjusted loss, 16 cents per share. Sales did beat 48.7 billion. A little perspective here, something that we were considering, Dennis. They withdrew their fiscal year 25 earnings guidance back on July 1st. I think last night or maybe the night before, you were like, well, didn't they warn already? Isn't their report just going to be like in line? I went back and looked and I thought, oh no, this was only for the full year guidance. They withdrew that guidance. They didn't comment on Q2 that they just reported. So there was, expectation here that we're going to be getting new information from Centene. We did, the results weren't like horrible, but this was probably the lowest bar, and the stock is down. What is it down? 8% today?
Another 13.
13%, and it's bringing this whole space continuing lower. Molina lower. We have Oscar lower. We have UNH lower. It seems like on the Centene report, but how much of that downside here in these names, Dennis, is just investors realizing how much this space is hated? This has got to be the worst space out there right now.
Momentum traders look at this and say, are you nuts to buy something like this? So there's no momentum trader looking at this whatsoever. And your value investors are skeptical. And, even the arguments with UNH, which we've argued in the past too, and, if you had a 10-year time horizon, maybe UNH is going to be fine. But, there's, an analyst making a pretty good argument on CNBC last night that covers the sector and saying, hey, look, these numbers are coming down for UNH. So we can look at it on past and say, oh, it's only trading 11, 12 times earnings. It looks good. But he says when you start, crunching the numbers and thinking these estimates are going to be coming down because the stock is having trouble right now, he's like, you can see where this is trading actually still 18, 19 times earnings. Historically, UNH has traded 21, 22. But it's just not as cheap as you think it is. You think when a stock gets cut in half, it's like, wow, this stock is really cheap. But that's just not the case. And, you can look to the long-term time frame here too, when it was $600. So basically, if the estimates come down, at 275, be trading almost the same price. So your value investors are skeptical and your momentum investors are out. So, well, who does that leave? I mean, there's two major investors in this market we're always talking about, the value guy and the momentum guy. So, I mean, I'm a value guy and I'm like, I don't know if I want to jump in there. I don't know if I want to be the hero. If I did, it's going to be on small size and just wait it out. But I mean, this is just a tough story. And it's a tough story that just doesn't want to get legs. And what they often do, when the stocks are going down, they don't usually give you a chance. I like Guy Adami, who has said this on CNBC lots of times. Maybe a chance to buy the bottom for this long. It's been down here for 3 months. They don't usually give you a chance to buy the bottom for this long. Usually when it's hanging out this long at the bottom, it's probably making a new low. So, is 248 on the horizon? Maybe. The one case would be as if they get cleared. DOJ comes in and say, hey, there's no fraud involved. This company is sticky clean, and and then you'd see a significant pop in the shares. But we're not even close to that yet. The investigation is just getting started here. So I think we're a ways away from getting that relief pop that the DOJ didn't find anything. The Brentster here having a little bit of trouble here, so I'm just talking with myself, but that's okay. You guys like it when I go on my long run on sentences. We'll bring Brentster back here in the background in a second too. So you're stuck with me for now because Joel's swimming. And the Brentster's computer just froze up on him. We're going to get the Brentster a new computer, though, because this is, we can't have it freezing in the middle of the show. So, okay, that's UNH story. That's that sector. It's not pretty here. Let's go back to earnings here just for a second because we were covering CNC. We covered Intel. Deckers last night is a good story. I need some positive stuff to talk about here. So if we go to Deckers, they are having a pretty good time here this morning. Here you can see the big pop in the earnings last night, and then it gave it all back. Fade trade worked again, but you know what? Then it climbed back too. So interesting, the Deckers has that huge pop on the earnings. Then it gives the whole thing back. And then she starts to climb here again. So, there is some fade trade happening in both directions here. It's not just buyer exhaustion, and sometimes it's a little bit of seller exhaustion here too. Do you have that report here? The Brentster is back. Do you have that report in the ECK?
I do. It was a decent report. Guidance was sort of okay. They reported Q1 earnings 93 cents, beat almost by 20 cents, a 72-cent estimate. Sales $964.5 million. Analysts were all the way down at $900 million. The Q2 guidance, they're expecting earnings $1.50 to $1.55 versus $1.56 estimate. So a little light there. Sales were in line for the Q2 guidance, $1.38 billion to $1.42 billion versus a $1.4 billion estimate. I was just joining back, I think, when you might have been explaining it, but I asked you again if you didn't do a triple D. What did you think about the rebound in this name last night after that initial?
Oh, it's good. You never want to see a stock go up 10, 12% and then give it all back. And it did that, had the initial pop and then gave it all back. But the rebuild of it, that's, gives you a little bit of hope, there's maybe something more to this. I mean, Joel always does such a great job with the technicals. The one issue you're going to have with Deckers here, if we go out to the daily, is you do have overhead supply. Here's the stock. It's been coming down, down, down. It feels like forever here. But, this is, where you're looking at this whole area. It's 125, 127, 128, 130. So all in here, you get into overhead supply issues here. Last night, when we were going into the highs, we can just move back to the daily here. You can see we got up to about 125, 126, which is where you'd expect it to stall. So, 130 may be room. So there is overhead supply issues here as well. This isn't a stock that's in an eternal uptrend. This is a stock that's in a downtrend, and we like to sell bounces on stocks and downtrends. So I'm more inclined to be a seller of the bounce than to say, hey, this is the big turnaround story for Deckers. And again, you can look, there's lots of other shoe companies here as well. I mean, better stories here. On has been an incredible story. The stock is obviously, having a sympathy move here this morning. Trading up here. Crocs has been a pretty good story too. Not so much as of late, but it's kind of a consolidation station here too. But Crocs is getting a little bit of a pop here this morning, and then DKS is another one. Dick's Sporting Goods, which is getting a little bit of pop with it as well.
But go back to that last chart, Dennis. Deckers? The Crocs chart. The Crocs chart. Yeah. So look at the Crocs chart. This looks very similar to the Deckers chart. Now go to Deckers real quick if you don't mind.
Okay, these are just the intraday charts, but yeah.
And so now go to ON. Go to ON. This chart does not look the same, and we
climbed all night. It wasn't getting chopped up around.
We always look for peers. Like that's a huge part of your strategy is understanding the relationships, understanding how the peers are moving. So as Deckers is reporting and we're seeing the sell-off, we start looking around at these other names that we just looked at, and on sticks out like a sore thumb for showing this resiliency. It didn't sell off barely at all, and it's up a lot higher than Deckers is right now. What do you think of this response in ON, Dennis?
Well, on is just a different story here too. I mean, you can look at the story and here's just a shorter term time frame, but when you go out, on has been an unbelievable performer for the last few years. We go out to the weeklies and your stock was $25. So it's been good. It's a sexy story. The one thing about retail, it's always tricky because they get sexy for a bit and then they cool off. And when companies first come out, they want to have extreme, like they give them huge valuations. And once that growth starts to slow, the multiples contract quickly here. So it's always a matter of how long does that story remain hot. I mean, the best example we can think about this is Lululemon, because Lululemon was an absolute, juggernaut in the retail space for years and years and years, carrying a 40 multiple. And they're like, well, this is the 40 multiple because this stock is just awesome. And if we go further out here, which Trade isn't doing, but 2018, 2019, the stock went from $80 to $500. Well, obviously we topped out last year up here around $500, and we've continued to leak here ever since. Some people are blaming tariffs. It's something to do with it. They get 60% of their clothes from Vietnam. We still don't have a trade deal with Vietnam. We don't know where that's going to come. Proposals were, upwards 50, 60, 70%. Remember, that's part of the deal, though. It's probably going to land a lot lower than that. But growth has slowed here. There's no doubt that Lululemon's growth has slowed. And what you have here is a classic case of multiple contraction, where when you have stocks that are trading with retail stocks trading with PEs of 35, 40, 50, those aren't sustainable in this industry. They usually will eventually start to contract once the growth starts to slow. So inevitably, Lululemon growth has slowed now, and that's why you're seeing this entire move being mostly multiple contraction. Now we're trading on Lululemon like last time it looked like 15, 16 times. So it's moving into more of a value stock as opposed to a growth stock. Could growth come back here? Yes, but they've got issues. It's just slowed down. So where everybody's talking about Lululemon, and the yoga pants here 5-6 years ago, nobody's talking about that stuff anymore. So you're seeing that natural contraction in the multiple just because the story has cooled off, and that's not sustainable at a 45 PE when your story's cooled off.
Mm-hmm. Kind of getting ready to wrap up the earnings section here, I think, Dennis. Did you have any others that you wanted to look at real quick? Did you care about Charter this morning at all?
You can look at it, but I don't really care. So Charter's getting the beat. CHTR, if we go out here and look, I think it's down about $35 here this morning, which is a $300 stock, but it's not looking pretty on the charts here. So CHTR is another broken stock. There's so many broken stocks, and broken companies, broken stocks are two different things. Sarepta is a broken company. Charter is a broken stock. So, does it eventually find its way again? Maybe, but I mean, it's $800 back in 2021. It's $339. Momentum traders say no thanks. And the value investors, again, it's not even value investors, maybe are hesitant on certain things. Value investors are hesitant on a lot of stuff because this has not been the value market.
One news item that wasn't the most exciting, but I think you identified like an intriguing, I don't know, little discrepancy here was our Schwab buyback. And we kind of touched on it a little bit earlier. They announced a $20 billion buyback, and it's kind of holding on to gains here. In contrast, like you said a little bit earlier, Bank of America announced maybe a $40 billion buyback. It was bigger, and that news kind of got sold within a couple hours of that information breaking. Schwab's kind of holding up here, Dennis.
It is. Bank of America had the buyback, now it's $40 billion, and the stock couldn't hold its gains whatsoever. Schwab is holding up here. $20 billion buyback announces at its highs in session. That's good. And you'd think the stock would go up on a $20 billion buyback, so logic says it. But, from my experience trading buybacks, and I've done it for a lot of years, is the market, they work over time, but they don't work instantaneously here. And the market is not patient. This is a very impatient market, which is why it doesn't give a hell of a lot of love to buybacks. Think a $20 billion buyback, you just think logically, if you wanted to go out, just do the CFA, let's, take our day trader hat off and actually go do the CFA hat on here right now. The way I would normally do this is, I would look at the market cap of the company. So we go into Charles Schwab and we say, okay, well, this company is trading with a market cap of about 175 billion. Well, if they do a $20 billion buyback and retire those shares, that's going to make the market cap potentially go down to 155 billion. So all of a sudden, your EPS should rally like 25% off of that. So, or no, my math's wrong, 12% off of that. So you think, wow, Charles Schwab only up 1.7%, and this has the potential to increase earnings power by 12%. That, sounds really good. Maybe we should be buying the stock up. But again, this market is not patient. This market doesn't want to wait a year and a half or 2 years to try to get that EPS to go higher. It wants money now. You do a special dividend, and they reward you immediately. If you do, a buyback, they reward you a little bit, but not that much. So is there the potential for EPS to go higher on buybacks? Absolutely. Think about Apple, how good the story has been. Not really. It's been a buyback story. That's what really has driven Apple, is multiple expansion and buybacks. So buybacks can drive price in the longer term, but this market is not patient and doesn't like to wait for the longer term. So that's why they don't reward buybacks as much as other things. Chat's going nuts on CNC. I don't know. They must have just said something in the conference call, but you can just see the rebound here. It's, oh my gosh, it's back. It's back. It's back. Well, no, it's not really. When you go to this daily, we'll go like this and say, hey, where's the rally? It isn't there. There ain't a lot of rally there. So we do have a rally, obviously, in the short term, and you're seeing a bounce back here, which is nice. And it's an oversold condition. There's no doubt it's an oversold condition. We said the bar is low. So they said anything okay on the conference call. That's what's happening here right now. It's a conference call that's going on. I'm doing a live pre-market prep show, and listening to the CNC conference call is not tops on my agenda here. I listened to the call the other night to see what Elon Musk was going to say, but listening to the CNC conference call, that's down there quite a bit on the bucket list. So if you are listening to the call, let us know what they said. They obviously just said something to spike the shares. Is the spike, going to continue? Hard to say, but a lot of overhead supply here, folks.
Couple things real quick. We are not going to get any data at 8:30. Just a little heads up there. We are standing by for Kenny Glick to show up backstage. We're gonna have some fun with Kenny Glick. You're in for a treat whenever you're tuned into the show, pre-market prep show, when we're getting Kenny Glick. Let's go to a couple other topics here. Dealer's choice for you, Dennis. Did you want to touch on Sarepta, or do you want to go to the couple offerings that we noted?
Well, let's do Sarepta first.
Let's do Sarepta.
Yeah, so Sarepta comes out, and it looks like the EU is going to pull this drug too. We did have durable goods come out, so I'm going to call your
durable goods. Oh, sorry about that. Durable goods, a little better than expected, down 9% versus a 10% estimate. Core durable goods were a little better than expected, up 0.2 versus a 1/10 gain estimate. Market not really moving on durable goods. Yep.
Back to the Sarepta headlines here. So it looks like Elevidys is not going to get EU approval here, and we know why, because 3 people have died. JP Morgan also downgrades the stock to sell today. Underweight is what they call it. So Sarepta, trading down for multiple reasons. JP Morgan commentary: we are moving to an underweight rating from neutral. We are removing our December 2025 price target of 16, given currently Sarepta shares are trading on sentiment, headlines versus fundamentals. Nearly every Elevidys headline this week has had a negative skew, including related to the agency's stance on Elevidys, the potential need for additional clinical trial work, and patient death in Brazil on therapy. So bottom line is, they're removing the price target because they are nervous too. HC Wainwright comments again, which they do every day. They've been pounding the table, and they continue to say that this is a zero. So not often as an analyst comes out with a zero price target, but that is the case here with Sarepta. And I mean, I'm not going to argue with it. I was in the stock for a little while there, obviously sold on the bounce when they cut the workforce by, 36%, and they gave us that nice 60% pop. That was the gift of all gifts, got me out of the trade. And actually, we were going to make a little bit of money on the short side as well. This story is just ice cold.
Roche was partnering with Sarepta in Europe, Dennis, and that was the news today, is that Roche came out and had to basically do their side of what Sarepta has been doing over in Europe. So just to kind of deliberately state that news item from this morning.
Awesome.
Okay.
Not awesome for Sarepta though.
Not awesome. I know you were giving me a compliment.
Awesome.
Thank you. Not awesome.
Yeah, color. Awesome color from the Brentster. Not awesome news for Sarepta.
A couple offerings that we had on our radar last night: ASTS, Space Mobile, doing an offering, but they are also doing a concurrent buyback with that offering. And ADT is also doing an offering. I think that's what it was. Or was it? Did I get them mixed around?
I don't know if ASTS would be doing. Are they buying back their shares at $60?
Let's see.
They're doing that. That seems a little bit crazy.
ADT was the buyback.
Yeah, ADT doing an offering and a buyback.
Let's start with you have ADT if you want to start with ADT, Dennis, or if you want to start with
so they get the bounce, you get the sell off on the offering, then they see it's with a buyback, and then it comes back. And does anybody care about the ADT story? Not really. It's a nothing story here. So ASTS is a story that is very sexy. It's a story that the stock has run significantly here and doubled since April. You can go to the dailies and you can see sexy story. Buyback, selling for growth, raising money is prudent. That's the one thing that we've seen them actually reward. Companies that are running and then selling some shares to raise some money is never a bad idea. Now, this was a full, I don't have it in front of me, Brentster, but this was a full offering by the company, not by selling shareholders.
I believe so. Yep.
Yeah, and the convertible 7207, it looks like the conversion price, which is quite a bit higher here than where we currently are standing. I mean, $56, it's a dip, but, we've seen dips get bought on these stocks before. Momentum's still there. I'd say above 50, you're okay still on the ASTS. Below 50, it gets dicey.
We are, real quick, Dennis, we are just getting a press release just now from Sarepta. They are basically confirming what we knew about Roche. They're saying that they acknowledge a CHMP negative opinion for Elevidys. The CHMP is basically like the FDA in Europe, let's call it. Stock is not really responding here because this is something we already knew about, but just wanted to confirm that press release hitting there.
Okay. That's Sarepta. We're going to have the Warlock here in a minute. We're just waiting for him in the background here, so get ready because Kenny's always fun to have here. A couple other headlines that we have not hit here yet. I mean, you can throw me back to dealer's choice if you want. I wanted to cover Oscar, which is seemingly, obviously in the sector, it's been really rough, and it got downgraded every day. And this is a stock that I do have in the long-term portfolio that I added, and it really rallied like the last few days. It's holding up well considering how bad this sector is. I mean, people can say, oh, what a disaster the stock has been. But this sector has been a disaster here too. And the stock kind of found support where it needed to. It's been downgraded, honestly, I think 5 of the last 6 days. So it's downgraded here again this morning. So if we go into the OSCR, downgraded today by Baird to neutral. They give a $14 price target, lowering from 28. So they're kind of saying, it's just going nowhere here. I think this is the one you got to be patient on. But one thing that's been working for us in the STN room is this has been like one of those stocks that seems like it goes up at night. Like you don't want to hold it into the morning because it seems like it gets a downgrade every morning, but it seems like it gets like it's sold and then it gets a little bit of a lift at night. And we've been trading it that way, where we've been buying the close and just flipping it out after hours. And it seems like it does because there's people who like the story here still. So Oscar's actually been an okay tradable stock despite the downtrend here lately. I do think, this is a retail darling with a story, but that story is cold right now simply because the industry is ice cold. Also continuing, I might as well go through the ratings here right now, so we'll keep Kenny, later on here too. I have a whole bunch of ratings to talk about here. So I want to go to Carvana here this morning too. This is probably one of your ratings of the day. CVNA is trading up 2.76% in the pre-market, or 9 points. They are getting an upgrade here from Oppenheimer, putting a $395 price target on it. Our tracking shows discounted on Carvana has returned to pre-tariff scare levels. So meaning, obviously after, the tariff scare there, that, stock obviously got hit. Now it's been moving up. We lift our Carvana price target to outperform, established 12 to 18 month price target of $450. So sorry, it's up to $450. The price target right now. Carvana represents a unique digitally driven disruptor within the expansive and inefficient domestic used car marketplace. So following significant fundamental and financial repositioning, Carvana business model is now humming, generating meaningful cash, scaling and capitalizing well upon improving underlying demand trends within the space. So they are fans of Carvana. I'll go to the dailies here for a second and try to play myself a little bit of Joel Elconin and do a little bit of technicals with you here too. So if we go to the dailies, Carvana, is coming back up. So, here we are trading at 335 this morning. You do have this pesky overhead high here that we just got up to, around 364. So we're still quite a ways. Like, like you look at this chart, it's there a week and a half ago, but the stock moves. So there is some overhead supply here. But this is a dip on a stock that is clearly in an uptrend. Could this be a catalyst to kickstart this? I'm in the latter camp. I think it could be. I think this is a stock that could get momentum here again. Clearly uptrending. Clear little dip here. Now we get an analyst holding a $450 price target on it. I wouldn't be fading this move here this morning. So I'm more of a buyer of Carvana as opposed to fading the upgrade.
What about this Gilead upgrade, Dennis?
Yeah,
I think you had that one on your radar too.
Yeah, Gilead being upgraded here to is it to buy? Yeah, to buy from Needham. And here's another stock that has actually been consolidating, right at kind of there's been a consolidation station. So now we get an upgrade. Does this kickstart it? Well, Gilead's never going to be one that's going to blast off, because it's a drug. Drugs have not been doing great, but I mean, this drug stock has held up actually fairly well. So is this, the kickstart it needs to get out of here? Maybe, but the sector's tough. So I would say more on this one, guilty until proven innocent. I do like that it's been consolidating up near the highs of the move. I do love the relative strength in Gilead, which has been fantastic. I think Needham's picking the right stock. It's just been such a tough sector. So maybe I could be talking to it. I think there's the potential for it. It's a 114. I think it could hit that high from the other day, which was 114.87, which is up another buck from here. Can it get through 115? That's the question.
How about Estee Lauder, EL?
Also, Estee Lauder getting an upgrade from JP Morgan here. Estee Lauder, which is obviously, been having a great, move since April, $50 up to $89 here. Who is it that's got their full position in it? Michael Berry? Is Michael Berry all in on EL? Is it EL?
Yeah.
I think it's EL.
Yeah, it's
EL. He
EL.
sold every stock in the first quarter in his long-term portfolio and went all in on EL. It was a damn good call. If he did that, it was a really good call.
I'm pretty sure that was him. Yeah.
I think it was Michael Berry. Chat might want to verify that too, but that was a pretty good call to do that. So it's a gutsy call, but it's working out for him. So JP Morgan upgrades Estee Lauder to overweight. I feel like they're a little late to the party here, though. Stock just went from 50 to 90. This isn't some AI company. This is Estee Lauder, we used to call it. So I'd be more of a seller than a buyer here. I think at EL, I think JP Morgan could potentially actually be buying the top. We have Andrea Teixeira from JP Morgan upgrading it from neutral to overweight with a price target of 101. So, I mean, you're upgrading it now. You're giving us a 10% upside, but the stock just ran 80%. Do I really want to come in for another 10% here? I think it's a little bit late to the party. So I'm going to give her the late to the party award here on Estee Lauder. I think she's late. I'm more of a fader of this upgrade here this morning. Doesn't mean it's over, but there's some resistance up here at 92. You could even argue a little, head and shoulders from a little left shoulder, a little head, a little right shoulder. It needs to get up over 90. Let's see if it can do it. But I'd say, again, on this one, guilty until proven innocent. So for the most part, I would like to, say that I like the Carvana. I'm lukewarm to the Gilead, and I don't like the Estee Lauder upgrades. So that's my summary of the upgrades.
A downgrade from at Alta from Loop. Was that your downgrade highlight?
Yeah, so there wasn't a lot of downgrades right now. We're in a bull market. The analysts are all scared. But ULTA, which has been moving. So this must be a valuation call here, and we'll go jump into the note here as well. So just hang on a second. ULTA, give you some color here. Loop downgrades Alta to hold. Thanks to Street Insider for the great color here too. We are downgrading Alta Beauty to a hold from a buy while maintaining our $510 price target. A downgrade is based on current valuation levels, as opposed to a more bearish view of the company's fundamentals. Simply put, we believe our bullish outlook on Alta Beauty is largely priced in at current levels. Thus, we await a more attractive entry point to become more constructive on the stock again. So pure valuation call. And I mean, I'm with you on that. So same reason that I don't like the Estee Lauder upgrade, I kind of like the Alta downgrade here because we've run a long ways. This isn't some sexy AI name here. This isn't some company that's going to change the world. This is a beauty products company, and it's had a hell of a run. It's went from $300 to $513. What more do you want? So I think it's a perfect time for Loop to be downgraded to hold. So bravo to the Loop analyst Anthony Chukumba, because I think he's making a bold call on valuation. I kind of like that one. So trend's still up. Trend's still doing good. Stock is getting hit here this morning, obviously off of the valuation, but off the downgrade. But I kind of like it. I kind of like his downgrade, meaning I think he's making a good call, and I think I'd ring the register on this one too. Kenny is in the background. He's just setting up here right now, so we're going to get the Warlock on here in a second, and we will stay over time with the Warlock. So don't worry, you won't miss a few minutes with Kenny because we stay over time with Kenny because he's awesome. We love our.
Well,
Kenny
I was hoping. I was hoping to pick your brain on this U.S. Cellular T-Mobile thing, the special dividend, Dennis. So hopefully we'll have just a little bit of time after Kenny to talk about this. But Kenny looks like he's ready to go.
Kenny, you give us a thumbs up if you're ready. He's looking behind him. Kenny's always ready. He's always ready with a smile on his face. You gotta love Kenny Glick. Okay, give me that intro.
Good morning.
Laugh it up, Kenny.
No, I just had a panic attack. I actually deleted my Thinkorswim just now. I don't know what that was, and I just got I got like a runtime error. What is this? 1994, and the whole platform just disappeared. I got a red box. Wow, I was like, what? Did I just get
Have you fixed the problem? Did you get it fixed?
All good, yeah.
Yeah, I just deleted everything and then reinstalled it. Wow, thank God that worked.
Yeah, it's a bad feeling when the market's going to open in 45 minutes and you have no way to trade. That's not a great feeling.
Well, I got a backup to the backup to the backup. Yeah, but
okay. He's a real trader. I always say you got to have a backup to the backup, but he's a backup to the backup to the backup.
Yeah,
that's how you do it.
So I got laptops ready to go. So in case I have a meltdown over here, I got another section over there. Yeah. Oh my God! I don't know what that was. I don't understand. I just tried to change the logo of the location of the icon, and suddenly everything went blue. That's strange. That's weird. I feel like
now you're never gonna do that again. We're glad you're all right, Kenny.
Thanks.
We got to talk about your kids trade here, because I don't know if you talked about it on pre-market prep. I know you mentioned the STN room, but I know you told your kid to go buy the cues, and I've actually put the cues on the screen here for you. So, you can see the cues. We know you love the cues here, Kenny. We can give you the daily on it there too. But the funny thing is, he tells his kid. So tell us the story here, because he told your kid to go buy the cues. So how did this trade work out?
It worked out all right. He bought the Qs, QS, Quant Escape.
It makes so much sense.
Yeah. Look at the stock.
Yeah. Boop, boop. I wish there was some size on, but he's just getting started. But I was like, what is this? But funny thing is, we were talking. It's not like he made a major mistake. It was hilarious because we trade them both. So the QS has been one of our favorite stocks because of that pattern you're looking at right there. We call that the Andy Dufresne. And these last 2 or 3 years, and again, that's why I like being a bear, because why
do you call it the Andy Dufresne? And I absolutely love Andy Dufresne, and I love the movie, but why do you call it the Andy Dufresne?
Andy Dufresne pattern basically is a stock that's crashed and kind of is forgotten about, and then wallows through the muck for quite some time, and then comes out of the muck and then runs to say Wataneo. So, since 2021, after we had some nice, pullbacks in the market, and like Carvana, AMD was my first one back when AMD was coming out of that 250 range, and it was just dead for like almost 10 years. And when it came out of that pattern, bang! Same thing with Rambus. Actually, Rambus finally making that move, finally back into the 70s. But I just look for stocks that have been dead for quite some time, and because I'm a shorter, I know what they look like, and I know when the shorters overstay their welcome, which is basically on every stock right now. So we've been dumpster diving. We were talking to Herb Greenberg the other day. We're basically underneath the dumpster, sifting through the juices, and it's just every one of these stocks. Stocks like Kirkland are moving, GoPro are moving. We are really scraping. Yeah, when you're squeezing Kirk and GoPro and Children's Place. That's where we're at right now. PLCE.
Yeah, we traded this one live in the STN room. We actually called that one.
Just awful stocks. And most of these look exactly the same. Like this new one we got, LIDAR, LIDR. Look at this awful chart. But yes, the more sideways action you have, and then it comes out of that Andy Dufresne, usually you run. And then if you consolidate, then you become a real boy. Like ASTS, that started out as this junky stock, and next thing you know, it's one of our favorites, which we're playing with this morning on that, big smackdown on the offering. Stock keeps coming back. I'm going to keep buying it.
Yeah. So how do you know? Here's a question for you, because you trade all this momentum stuff. How do you know when the move is real versus this is just going to pop for a day and then give it all back? Is there like a point that you're looking at? Like obviously you use VWAP. What else do you use to tell you that, hey, this one's actually for real?
Well, luckily, luckily we are day traders first. So it's a lot of times this is like, okay, let's make money on this as long as the volume's there. It's like open, OPEN.
Yeah.
The volume just explodes. And if you're going to still trade, you had up to 90 million, then you had 200 million, then you had 1 billion shares. I think you had 2 billion shares trading on this.
Unbelievable.
As long as the volume's there, I'm still going to keep an eye on it. But, you get a stock that goes from 50 cents to $5 and you're not a seller, you're asking for trouble.
Yeah.
You never know when the move is completely going to be over. But, again, I'm a day trader first. So usually I just look at it for the day, try to make as much money as I can, and then I'll go take a glance at it. And again, as a shorter, I got to borrow on this one. I shorted it the other day. I even shorted LIDAR. These stocks sometimes are hard to borrow or impossible to borrow. But if they're able to be borrowed, I look to short them the next day because generally they're all pump and dumps. But when they get pumped again, that's when the shorter who hasn't covered yet, they're in trouble. And the bag holder who thought he was a bag holder gets very excited and they start buying more. And then you get a second move. And a lot of times the second move is better than the first because it catches everybody off guard, because usually it's usually over in a day. So, but now it's just one after another. Now,
what are your thoughts here on this open? Because this is Eric Jackson, obviously, is pumping this on social media. He was tweeting at, we were talking about this, like he's tweeting at Carl Cantoni and he's tweeting at Jim Cramer. He's like, I want to come on and talk about this stock. I mean, eventually they give him an interview. It's going to be a catalyst. Right. Is this something you watch, or is you just wait for the volume to start picking up to tell you to come into this?
Yeah, that's precisely what it is. I have the scanners looking for unusual volume and the percentage gainers. So that, tips you off. And then I go right back to the charts just to get that head start on it. But there's like I said, there's an open every day. There's like 2 or 3 of these now every day. The dash for trash continues, and it just continues and continues. That's why we, like I said, I was talking to Herb Greenberg, and the signs that used to mean maybe this market's running out of steam, the dash for trash, the ridiculous short squeezes. Solar just had this ridiculous short squeeze that we were talking about. Completely worthless companies like ENPH and Solar Edge, just but monstrous moves. But like I said, we just keep rotating into the next one. But while this is going on, earnings season is here, and my bread and butter trade is still these earnings reports. I love. I was trading RTX, Coca-Cola, Halliburton. Those are my 3 best trades of the week, and AT&T. So, and again, I only trade these stocks after they report, and that's my favorite trade, the reversion trade. If you gap down a stock like Chipotle yesterday, gapping down, there's going to be a buyer showing up at one point, and we just look for the VWAP break. Tesla yesterday was a buy, Chipotle was a buy, and IBM, down 25 points. I was waiting all morning to buy that, 2 or 3 points out of that. That's the bread and butter, and then I go, and then you can't resist these $2 stocks ripping all over the place.
No, it is. And I find myself talking about them too. And I'm not even a penny stock trader, but you just look at these moves and, they're jaw dropping. And the short squeeze trade was fun this week. It really ignited and probably started with the open, and then obviously spilled over into other things. And like you said, when you start seeing the GoPros going, Kohl's, who the hell? Kohl's going up 100% in like 20 minutes here. This was one of the most ridiculous moves I've ever seen.
I'm so impressed that they could able to conjure the strength up to move something like that so enormously. And thank you for doing it, because I shorted it at 20.
Nice.
Yeah, that was easy to borrow that morning, and it was just once it blew the top off around 21.50, I got short around 20. I covered too quickly at 17, but still a good trade. But yeah, they're just, it's like pick me. Everybody's getting a chance. So, this is where we start talking about, is Enron still around? Are we going to trade Blockbuster soon in the pink sheets? That's where we're at. It's unbelievable. Every bull market has this moment where we're just not just irrationally exuberant, we're psychotically exuberant right now.
So, and that's the question here too. Like, we actually, titled the show here today, Buyer Exhaustion with a question mark, because we're starting to see some pockets, very slight pockets. I'm seeing some signs, with this short squeeze stuff going on, because typically, like you said, when the dash for trash is on, we're getting a little bit long in the tooth. And we have to give it perspective. This has been an incredible 3.5 month run here. It's like, forget tariffs. The market doesn't even care about any bad news. It just shrugs everything off. So it makes me somewhat skeptical here. And, you are seeing IBM had an okay report, sold off on it. So we're seeing pockets of maybe some buyer exhaustion, but I don't know if it's turning over and saying, oh, the bears are grabbing control. I think the bears are hiding in their caves and they're scared to even peek out right now. But, what are the other signs you'd be looking for to say, hey, maybe we're just getting a little bit, long in the tooth besides the dash for trash?
Give me some volatility. Give me UVXY coming out of the dead. That stock, that is just absolutely just, and it's almost comical that still people, I read the message boards and I'm on these websites where they still think that that's going to be a way to hedge your portfolio. My friends, stop it. Look at that chart over any extended period of time. It's no hedge. It's an indication of the moments of fear. But what it does do, if it's still drifting down, that there's nobody selling this market right now. So give me a couple of weird up days in UVXY, and that'll give you that heads up that the market's going to sell off. Or how about this? We break a prior day low. We haven't even broke a prior day low in a while. We are just grinding the shorts to death, and everybody they're still debating. But I've been telling people this, and I was on the show with you guys. After that May 12th power gap, this market looked like it was running, the Qs particularly was running into the resistance. We were going to have a battle there, but then we gapped above that on May 12th and just trapped everybody. The shorts were left thinking, oh my God, I missed my chance to cover. I'm doomed. And the longs who were still debating, now they're still chasing. And that's been the move since the May 12th power gap. And, I've seen that move before, and I usually was a victim to it. And I've just pounding the table to keep buying the Qs until they break. And, again, this might sound crazy. I like going out and doing some predictions for a couple of years out. I got 1040, April 20th, 2028, 1:43 p.m. Write it down on a sticky pad. I'll see you there. Party's at my house. You're invited. I saw you
on the cues. On the cues.
Yeah.
So you're calling for another double almost.
I'm looking for an almost double in the next 3.5 years because I think we might have one of the parabolic move and a power gap because that's what this setup is. This grind. There's going to be almost like a capitulatory buy. Everyone's looking for that sell off or that rug pull. It's just not coming.
Yeah. Well, we call it upside capitulation. Where everybody says, I can't take it anymore. The shorts throw in the towel. They buy, and the buyers are speculating. They're like, I can't have it anymore. I'm just going to go buy NVIDIA at a $5 trillion market cap because I can't take it anymore. Get me in at any price, no matter what, a la Cathie Wood style.
Exactly. And if Tesla was coming back in a bigger way, we'd already be at 575 on the Qs. So we're doing this
Tesla
without
holding down. What do you think of Tesla here at 300? Is this just another buy? It's the ultimate buy the dip stock. I mean, Cathie bought 147,000 shares yesterday.
Huge fan. Same premise as I bought Tesla originally. Well, first I bought it because it was a car company, but I believe, and everybody thinks I'm nuts, but I think he's going to colonize Mars. And I think everything that's built on Mars eventually is going to have a Tesla sticker on it. And you're going to own a piece of Mars, kind of like Otisburg from Superman, where they colonize. He's colonizing it after he's going to blow up half the United States, and you could claim your land. I like Tesla, but I don't like it here yet. I want to see, like I said, capitulation. Bring it back to that 285. Let me see who's boss there, because I still think this thing could fall another 70 points. Once you're out of favor, crazy things happen. And this thing was we were under 200, during the tariff moment. So give me 235. I'm putting my kids' life savings into it, not my life savings.
It's hard to bet against Elon Musk. I mean, and I keep saying the same thing, and I've been a Tesla bull for a long time, and I have it in my long-term retirement account where I'm trying not to look at it here. But, the reasoning that people say, why are you investing in 150 times? Well, because they're working on all the real AI stuff, like the physical AI, like cars, self-driving cars, humanoids, SpaceX colonizing Mars, like you're even saying. I didn't even consider colonizing Mars. I mean, now it makes me even think it's hard to bet. Again, his timelines are messed. We know he never hits any of his timelines, but he still has had ridiculous accomplishments. Like when you look at what he's accomplished from where he PayPal to obviously and to even get the cars to self. Have you driven in a Tesla self-drive? It's a crazy experience.
No, but speaking of Total Recall, that's why I won't do it. I ain't getting to Johnny Cab. I see Johnny Cab. But
great movie, by the way.
Yeah, I love it. That's what I think. I think it'll be just like that. And when he'll invent the cryo machine that we could actually go to sleep and go to different planets. I'm telling you, I got faith, but not yet. When it's out of favor, kind of like UNH. If you're not thinking about buying UNH soon, I mean, give me another 40 points down where everybody's crying about it. You're at 10-year lows on UNH, and I don't care about a scandal right now. And again, it was already a buy this morning, but you're at basically decade lows. So I like when stocks get smoked like this. I was looking at a 15-year chart. It looks like it actually could fall down to 215, but at 215, I'm in. So yeah, just there's too much good stuff going on, and then you got this morning. I don't even know what CNC is, but that's the play of the day. You guys know about this?
Yeah, it's rebounded a lot. So we were talking about it. Obviously, this is same sector, UNH. It's been a disaster tire fire here. And we talked about the bar being in the ground. Like they just
is that what it is? I had no idea what this company is.
Yeah. CNC is like the right with UNH. It's all in the same sector here. And the stock has been halved basically, in the last 3 weeks. If we go to the dailies, you can see it right there on the chart there too. So obviously it's been just a tire fire. But, this morning, obviously they said something on the conference call, which was okay. They just had the conference call while we were on our interview with you here, Kenny. So obviously something was said on the call to turn the time frame around. So it starts looking. So use this as an example here. Here's a stock that was destroyed this morning, getting all the losses back. Is this something you use VWAP on and try to play from the long side? Thoughts on how you trade this?
Yeah, let me show it to you exactly. Let me get the share screen if I could do it. Let's see. Share this screen, entire screen, window, bang, bang, and boom. So there you go. This is one of my own, again, this came out of nowhere, but when we're watching, this is my basic trade. This is the earnings report. So, Each morning, I'm looking at who reported last night and who reports this morning. And my default is if any stock is gapped out on earnings, I'm just waiting for a reason to buy it, like IBM, Chipotle, and Tesla. If that moment never comes, I don't trade it long, but this moment came. So I missed this first move. The blue line is today's VWAP.
Because you're doing the interview with us.
The blue line is today's VWAP, and the orange line I have it anchored to prior day. So when an earnings report gets through today's VWAP, it's already a good buy. There's the pre-market kind of pivot. I would have, if I was watching, I would have been buying it here and here. I don't mind buying it up here, and apparently all my members are already in this one. So this is the 1 minute multi-day VWAP reversal trade, the one that I talk about how it hasn't failed in 3 years. There's another one. Chalk it up. So when you get that momentum, you see how it got to the orange line. That's where you found some sellers. When you consolidate underneath and you break through, 9 out of 10 times you're going to go higher. So even if you bought it at 27, you still made about 2 points, almost 3 points on it. So love it. Now that a lot of people have missed the move, I look for the counter trend move. So if it rolls over, I don't got no problem shorting it, breaks back under the 27, look for the reversion trade back to today's VWAP. So, again, this will definitely be on my radar today for a trade. But the easy money, quote unquote, has been made on that long, and it's wonderful. And right now, if I was long, I use the orange line and the blue line in my stop. But if you're looking to short it, I look at the peaks over here as my outs. So, again, it's right in limbo for everybody at the moment. And, again, because the move was so monstrous, I look for that reversion. Again, I'll look to make that $1.50 on the way back down.
Awesome. That's Kenny Glick, the Warlock, coming and breaking down the technicals like nobody else can. We always appreciate you coming on, giving us your time here, Kenny. Thanks so much. Joel's away today. He's swimming. He's trying to win the Senior Olympics championship here. So he's like only 80-year-old to ever try out now. But anyways, that's where he is. So Kenny, awesome. Thanks, buddy.
Thanks,
Great
Kenny.
to see you guys. Good luck, everybody. Have a good weekend.
Later. Sweet. Triple D. 1 minute over for Kenny, as we should have.
Yeah.
We want to give final thoughts here going into the market. Or you want to just jump over to SCN?
Yeah, we'll give some final thoughts here, and then we're going to jump over the Stock Trader Network here. A mixed bag here. We are seeing a lot of strong breadth this morning. It's good. A lot of stocks green here on the screen. I'm actually surprised the S&P is only up as much as it is, because I do see some pretty good pockets of strength. Like we were talking AMD here all morning. Intel's just disaster, but it always is a disaster. But, you see stocks like CNC rebounding here this morning. There's a little bit of seller exhaustion in some names here too. Like the value trade, let's call, we've been saying, we might see a little bit of buyer exhaustion in some of the growth stocks, but we're seeing seller exhaustion in some of those value stocks that have been really beaten up. And I mean, really even look, at, the drug stocks. Let's stay away from the healthcare stocks just for a second, which look like they're rebounding here maybe a little bit too. Maybe CNC can help that sector out to maybe rebound a UNH, something like that today. But, a Merck just quietly getting up to 3-month high here. Pfizer trying to build something here. Bristol Myers trying to build something here. So value names, those are your classic beaten down, names here, are starting to show a little bit of life here. So I think the rotation is still kind of there, where you had the Momo trade cool off a little bit, but the bull market continues because rotation station here keeps us alive, and some of those value stocks are still looking pretty good.
All right, folks, we'll see you over in the SCN, StockTraderNetwork.com. If you want to join us for the open, we're going to have Money Mitch on trading around 9:30. Money Mitch is going to help trade the open here. That'll be kind of fun. We're going to have CC Legator on Stock Trader Network a little bit later, and Triple D and I always do a closing show at 3:30 till around 4:30 or 5 p.m. Join us over there, folks. If not, we'll see you next week on Monday for pre-market prep. Have a good weekend, everyone. Later.
Thanks.